Now, let's get straight in then and talk about the financial services compensation scheme. And I'm going to take you to some visuals now which illustrate the difference between the scheme and the complaints process, because a lot of people get confused. Well, we don't, because we're knowledgeable, fancy mortgage brokers, aren't we? But the customers and clients do. So let's head over to some slides then, just to give you an indication where we're going then. So let's head over to my first slide. Now this is a PDF, this is a JPEG from the website of the Financial Services Compensation Scheme. And I can zoom in on this one because I can. And you'll notice that they've compared quite nicely the two different ones, the compensation scheme and the Ombudsman service, because people get the two confused. So we just drift down to the first section there. On the left-hand side, it tells us that the FSCS, as we shall now call it from now on, protects customers of firms that are no longer in business. So we're talking about firms that go bust, aren't we? Over here, though, the Ombudsman sorts out complaints between customers and firms that haven't gone out of business. They've made a mistake. They've given bad advice somewhere along the line. That's the difference. To make a claim for compensation, you must be eligible under the rules, which we can take a look at in a second. And the Ombudsman Service can help with complaints about most financial products provided in the UK. So that's the basic difference between the two, as you can appreciate. The FSCS has compensation limits, and the Ombudsman basically puts things right. It's not just compensation, but they have what's called redress as well. They can actually put the client back to what they were before. So that's the basic difference between the two. Now, the compensation scheme itself has a number of numbers. Remember, we're talking about firms going bust and providing with an amount of money in compensation. So I just whipped over to the website here, so you can do the same as well if you wish to. Here's the Financial Services Compensation Scheme website. And it's quite a good website, really. It just covers all the numbers, really. We've got this summarised in our revision guide. But the big one is banks and building societies. So it's all about deposits. It's about banks, building societies, or credit unions failing. And the 85,000 is the current limit, has been for a while now. Joint accounts get double that as well. There is a temporary high balance situation there, where you can see for 1 million. So if you sold a house, for example, you've got a bit of money on deposit, and that's automatic. Bear in mind, it is per institution. So if you've got a lot of money on deposit, you really should be putting your money in lots of different institutions. Just whiz down to the other ones for you. Credit unions are the same as we just looked at for you. Debt management firms are new ones. Now, these are debt management firms going bust as well, and they use the same £85,000. Funeral plans are a new one. Funeral plans were only regulated last year, and again, they give you up to £85,000 per person, but only if the firm is regulated. Not all of them are. We're talking about funeral companies who sell funeral plans here. Insurance firms, this is an important one. These are insurance companies, not brokers. And there's two types here. You've got compulsory insurance and you've got all other kinds of insurance. So compulsory insurance, long-term insurance, PI, professional indemnity, incapacity, injury insurance, 100% is covered, but only if the insurance company goes bust. It's not about bad claims or stuff like that. All other kinds of insurance is 90%, so most covered by 100. Insurance brokers, now this is the one that affects us. There you go, let's put that one. It all depends what you're selling. Is it compulsory general insurance or all other general insurance? Very similar to the previous one. Notice it doesn't talk about mortgages, because people don't lose money on mortgages effectively, do they? Because they borrow from a lender, not from the broker. The broker just does the dealings. Investment firms, these are companies, again, £85,000 is the limit there for you. And these are investment firms who invest money on behalf of your clients if they go bust. Not a lot of money there, really, to think about it. Now, these are mortgage firms. Again, if a mortgage company goes bust, and people with mortgages lose out, up to £85,000 again is covered. And payment protection insurance, compensation 90%, which is covered by the earlier figure on insurance companies. Pensions, pension firms, if your pension provider fails, 100% of your claim is covered. If you're SIP operator, that's the self-invested personal pension, up to £85,000, slightly different organisations there. Bad advice, again, is slightly different, but there is eligibility per person. So bad advice claims. There you go. And that's your legal rights. So Worth having a look at. On our revision guide, we've got a little summary of the numbers. Will you get tested on the numbers? Probably. You'll probably get tested on the numbers for the savings plans here, the banks and building societies. That's the one they tend to claim most, don't they, at the end of the day. So that's the numbers. Let's have a quick look then at, I don't know, just a bit of fun. See who's gone bust recently, shall we? Here we are. Just click onto another part of their website. This is quite a funny one. Well, it's not funny at all, is it? But it's interesting. Now, you'll notice here you've got a number of firms, a lot of investment firms there. You've got a few financial advisor firms going bust, haven't you, as you can see. Now, you've got there Craig Mitchell, trading as Craig Mitchell. They failed in December 22. You've got plenty of pension firms there. You've got they're looking after different types of occupational pensions. Pension firms, they're investment firms. Quite a lot of credit unions as well. Birmingham Inner Circle Credit Union going bust. Gloucestershire close to me as well. Click onto page 4 there, see what else we've got. Quite a few more pension firms there. PPI claims, South Coast Trade Centre. So they're not doing so well now on business-wise. Debt management firms, pension firms there. Quite a few firms, as you can see. Investments, a lot of pensions. It's also a lot of it's to do with the British Steel and transferring out of occupational pension schemes. There's been an awful lot of legal claims against these firms, so they've lost out quite considerably along the way. I don't know, it's just interesting to have a look at that, isn't it, when we see it. So that's a quick update for you on the Financial Services Compensation Scheme. The revision guide's got a few notes in as well.